Hello, and welcome to StiffX Trading Floor. As we have been promising that we'll be launching our YouTube channel, and today we'll have a topic on how to trade like a bank. We've been having so many questions, especially from our Telegram channel, on how you can be able to trade, or how do we approach our market, how do we approach our signals, how do we approach our trainings, and maybe even our investment portfolios, or how we manage our investment portfolios. And we found it important that we start with this one today. As you can see, we are starting from a point whereby from baby pips, we always insist as a team and as StiffX Trading Floor that you should start trading from the basics. Even today, we still come back to baby pips to look for the most basics in the Forex market before you continue or you advance to more advanced learning. And the key thing you can check, like from this tool here, you find that we have the technical analysis, we have the fundamental analysis, and of course the sentiment, which is the most ignored part. This is the topic, or this is where we approach our market based on the sentiment. I know most of the traders do ignore this part, but including the big banks, big financial institutions, these were the hedge fund managers and those who manage big portfolios, even us like we are doing currently. This is where we get the education from, or this is where we lay our basis from. It's a key thing. And one of the key thing you can, if you check from most of our trainings, we have this sentiment. We have a topic on sentiment. Based here from sentiment analysis. It simply covers two topics. One is the commitment of traders report and SSI. These two, or the COT, or when you're talking about sentiment analysis, number one, you have to understand that sentiment analysis simply means the feeling or the bias you have towards the market. Mostly, if you check from the retail part of the trading, in the financial or the big financial markets, small traders and the big financial institutions, one key thing you have to know that is that they don't trade in the same direction. They trade in different directions, and that is the key. When if you check the normal trades or the big trades, when they are moving down, the retail traders are buying, and that's why they keep on growing their accounts. So if you check most today on SSI, this is the one we want us to check on it, because the speculative sentiment index, this is the part whereby you talk of retail traders, or you visualize the positioning of retail traders, hence doing a contrarian bias towards the market. This is always done by big banks. Talk of Barclays, the Morgan Stanley, the Deutsche Bank, BOA, BOE, big finance, including all the other hedge fund managers. This is what they do. If you can be able to track how the retail traders have positioned themselves, then you can be able to trade against them. This information is no longer a secret, it's already there. So when you're talking about doing a contrarian bias, that means you do the opposite of what they are doing. Although we are retail traders, of course, because of account sizes, when you have accounts of $20, $50, $100,000, that does not mean you can be able to move the market. It means if the market may compose of talk of 5, or even currently may talk of more than $10 trillion flowing in a day, that means even $1 million is nothing in the market. $10 million cannot even be able to move even a single pip. That means you have then to move with the sharks. This is what we call swimming with the sharks. That means you are moving in the direction of all the flow of the market. And this one you can be able to visualize it on big trends, whereby the big market is moving. And you can see we have several characteristics of these retail traders. One, they have a small account. Two, they pick tops and bottoms. Number two, they don't have the skills. These are all most of the retail traders they do, because they just want to get simple information. They are just coming to the market to make money. But a good trader is the one who comes to manage a big portfolio with low risk, getting low money, but consistently in profits. And this information, you can be able to get it from, if you go to the daily effects, then you under strategies, you come here under sentiment, you can be able to see this information. If you check a currency like Audi Japanese yen, or Audi versus the yen, Audi USD, you can see the net wrongs in percentages. We're able to see the percentage of those who are buying, the percentage of those who are buying, and those who are selling. If you check currently like Audi USD, you can see 74% they are buying and 25% are selling. These are the retail traders, not the big financial institutions. If the big, if those who don't know about the market they are buying, that tells you the financial institutions are the ones, the minority are always winners in the market. Check like AUD-USD. If you come to the market, you can see we've been holding big positions over a long time, and we'll continue to hold them until the trend is normal. Let's go to an example like AUD-USD, and you see the example. If you check, like the market has been dropping, this one that we've been holding a trade from this point, it did hold a trade from these candlesticks all the way to this support level, whereby at this support levels we were able to exit the market. And we have so many other positions that we've been holding over for quite a long time, and this one has been evident. If you check another one like AUD-CHF, you can check it's just continue dropping. You just keep on moving your trailing stop loss, but of course it's almost kissing our TP here, whereby the TP in fact is supposed to be around this point, not at this point, because here you have a major support trade. But look where we did took this trade from this point. You take a trade from this point of view here under the daily chart, because the daily chart, at least we analyze our market based on daily, weekly, and the monthly charts. You can see you're able to hold a trade from the 17th of November all the way to almost the last of the month. So we've been holding this way for almost 2 weeks, and you can see the trade has been just dropping, and you have a trading stop loss of 100 pips. You continue dropping, and that's how you can be able to at least get $1,000. You see another one, almost the TPs are being hit. This is like NZD. CHF, you go to such a market. Let's go to NZD CHF and see what we have there. Go to a market like NZD CHF, check once again, been dropping quite big. This one, at least this is a signal we gave last Thursday. We are almost there at the support level. So these are some of the markets that you do get in the market, whereby this is how you trade. But when you go to the sentiment analysis, the retail traders have been doing the opposite. So just come to the daily effects sentiment report, check the percentages, and you have even explanations. You can be able to see, like in AUD versus the yen. You can check what we have here. Retail traders like AUD-USD, the one that we've been able to explain with. Let's see what has been happening. You see 74.6% of retail traders data shows that 74.65% of traders are net long. The ratio of traders long to short 2.94. So for every 3 traders who are buying, one big financial institution is selling. That tells you you should be on these guys here, on this side here. So what happens after all that? It simply means you can be able to take a contrarian view to the crowd sentiments. These hogs and sheep who are getting slaughtered, who don't know nothing about the market. And the fact that traders are net wrong suggests that AUD-USD prices may continue to fall. And actually what is happening to the market, if you go to AUD-USD, that is what is happening. The trade is still intact. It's only that we did hit this was our target, and we hit this one last Friday. That's how we did exit such a market. So that's how you can be able to trade this long trends. The key thing comes now into holding these positions. When you hit a sell, like an example, like this is just yesterday's trigger based on this candlestick yesterday. Though it was so big, I was expecting this market first of all come back, then drop down. But you can see the final part, or where we are heading to, is at this point. Can you be able to hold for a week or two? If you can be able to do that, if you check on the daily chart, you check this period separators, what actually means is that the market moves in a period of 2 weeks to 1 month. So if you can be able to hold your balls for just 2 weeks, you make much of the money. Let's go now to GBBCAD, the one we gave yesterday. You see, like this one, the market, I want to explain based on, because we are price action traders. Here is a scenario whereby we just take the market based on the chart structure, or how the structure happens. You know the structure in a downtrend and in an uptrend. And in a downtrend, you have lower lows and lower highs in a retracement back to the moving averages, and we continue dropping. But check at this point, the market changed the direction, made a higher high instead of a lower low. So, and the retest failed to break the previous support level at this point. You see, these are failure from this point. That tells you from this point, you can just use a candlestick pattern like this one. It's a bullish and outside bar, not an engulfing bar, because this was last Thursday, this was last Friday. So yesterday's sell was just nothing. Now we are at the positive side. Where do you expect this mark in the next 2 weeks? At least to come at least a 0.5, at least to this resistance level. This is the first point where I expect the market to be. Of course, you not achieve that by when you keep on checking your trade each day, day in, day out. No, you must at least give it a week, 2 weeks, even if it's just a 0.1, a 0.01, 0.5, depending on the size of your account, you'll get them out of these trades. If you check on what you have the swaps on this point, you have so many, you have big swaps. And this means you have been holding this trade for quite some times. And of course, you can see the volume. That's why I've been telling you guys, be checking when you can using the IC markets. You see, they do charge the commission. They are one of the best because you can be able to hold the market at the midnight. They don't hold for quite they don't charge a lot. They don't have big spreads. At least one of the best where you can do to hold this market. So that's what we've been doing on our signals, on our portfolio management, like in these ones. Even in our tradings, we use the same scenario. So this is how we do it. Make sure to all the time be keen on what you are doing. Again, this is a very quiet week. You can see even on we don't have too much interest rate decisions. It's only that on Friday we have the non-farm payrolls and some of the CAD employment and unemployment. Some of these informations or the economic calendar. So you have nothing, especially when you come to it, because interest decisions are the ones that can do change the current move of the market. For now, up to Friday, it's just a simple flow of the market. So make sure, go to daily effects, go to sentiment, try to follow these ones, and make sure your strategy is based on long term. Do not use at least from the daily chart. Or maybe you can use that and go to the lower time frames like H4 for specific entry. But if you use the candlestick and chart patterns, one of the best. Those who are going through our trainings, those who are getting our signals, they can be able to know, they can be able to attest of what we are talking about. I think from the StiffX trading flow, I think we don't have much. And that is it what I can see for now. Now it will be very vibrant. We will continue giving more and more videos like these ones so that you can be able to learn more. So learn, earn, and invest with StiffX trading flow. That is it, and thank you.